What's going on, everyone? In today's lesson, we're going to break down one of the most fundamental concepts in technical analysis, basic market structure. But before we move forward, I want to highlight something important. You need a solid grasp of swing highs, swing lows, and how liquidity forms around them. If you're unsure about any of those concepts, check the link in the top right corner or in the description. Watch the video first so this lesson makes sense on a deeper level. All right, so let's talk about how price actually moves. If the market intends to push higher, meaning we're in some form of bullish environment or bullish trend, price has to create a series of higher highs and higher lows. This is the structural pattern that defines an uptrend. For example, price will typically establish a low, then push up towards a new high, and when it pulls back, that pullback should remain above the previous low, giving us a higher low. If bullish momentum continues, price then pushes above the previous high, forming a higher high. And this sequence continues: higher low, higher high, higher low, higher high. This staircase pattern is what confirms upwards movement. Now, the market behaves the same way in a downtrend, just in reverse. A decline is characterized by lower highs and lower lows. Price sets a high, breaks downwards into a low, retraces but fails to reach that previous high, giving us a lower high, then continues falling into a new lower low. And this pattern repeats. As long as those lower highs and lower lows keep forming, this trend remains bearish. A trend only changes when market structure has shifted, meaning the market fails to continue its pattern. If price is in a downtrend, forming lower lows and lower highs, eventually the market attempts to push lower, but this time, price fails to break significantly below that last low. Instead, we see a strong displacement upwards, taking out a previous lower high, and when that happens, we get our first higher high, followed by a higher low, officially signaling the start of a bullish trend. The same logic applies in the opposite direction when shifting from a bullish to bearish. If price stops making higher highs and instead breaks below a previous higher low, forming a lower low and then a lower high, that's your confirmation that structure has flipped downwards. Now, here's where traders get trapped. Lower time frame structures can be misleading if you ignore the higher time frame narrative. Let's say on a lower time frame, you notice a clean sequence of higher highs and higher lows. Eventually, price displaces downwards and creates a lower low. Many traders immediately assume, okay, the trade is reversing, time to short. And yes, on that specific time frame, it looks like momentum is shifting. But if the higher time frame is still strongly bullish, that smaller time frame breakdown is usually nothing more than a retracement, a temporary pullback before the next push. That's why so many traders enter early shorts only to get stopped out when price snaps right back up and puts in a higher high. They were fighting the higher time frame momentum. When you align your trades with the dominant time frame, your setups become clearer, your direction become clearer, and you avoid trying to pick every top or bottom. It's far easier and far more profitable to ride the trend than to consistently fight against it. With that being said, let's hop into the charts and start identifying some real examples.
Okay, so in the first example, we'll be taking a look at a bullish trend on the Australian dollar versus the US dollar, specifically on the daily time frame. Okay, so as it stands, price is in a bullish trend and price has stalled right here. So let's see how price plays out from here on out. So as you see, price takes out this high, and let's see what else price does. And then price, now this is a swing low or a higher low. And now price made a next higher low and a next higher high. Let's see what else price does from here. Now, price makes another higher high, and price makes another higher low. You see the sequence playing out? We have a higher low, higher high, higher low, higher high, higher low. Let's see what else price does. Okay, this makes a next higher high, and this makes a next higher low, a next higher high here, and the next higher low. You see how price continues to move up in a staircase pattern? That shows us that the market is bullish. And when it's bullish, that's showing that buyers are in control of the market, meaning that we should be all focused on riding the trend and not going against the trend. Now let's take a look at a bearish example. All right, so on this time frame, we go from higher highs and higher lows to higher highs and higher lows. Now let's see how price plays out and switches from higher highs to higher lows into lower lows and lower highs. So we have price making the first lower high here. As you can see, it made a higher high, higher low, higher high, lower high, and it's transitioning downwards to make a lower low. Now let's fast forward. And as you see, price did make a lower low. Let's fast forward a bit some more. And then price makes a lower high here. And then it continues to drop down to make a lower low. Then price chases back up to make a lower high. And then price doesn't make a lower low. It doesn't break below this low to make a lower low. It comes here to make a higher low. But let's see how price plays out. Price then makes a lower high here, confirming that price did not break above this structure or this high to continue or to transform from a bearish trend to a bullish trend. It didn't broke above here. So it remains a bearish trend and continues to drop lower. And price does exactly that. It dropped lower, giving us another lower low. So we have lower high, lower low, lower high, lower low, lower high, higher low, then lower high, and then lower low. So price continues to go in a downwards pattern. All right, that wraps up today's breakdown. I hope this helped you see market structure in a much clearer and more practical way. If you learned anything new or this video brought you a step closer to becoming a more confident trader, make sure to hit that like button. It really helps the channel to grow. And if you're new here, consider subscribing and turn on notifications so you never miss the next lesson. We're dropping consistent, high quality trading content to help you level up step by step. And if you have any questions or want me to cover a specific concept next, drop a comment below and I'll respond to as many as I can. Thanks for watching. This is the Trading District, and I'll see you in the next one.